Welcome back to Approved AF, the mortgage licensing podcast. Today, we're diving into a topic that has saved hundreds of companies from fines, delays, and even revoked licenses: supplemental reporting. And we have the perfect expert here in studio. I'm joined by Erica Reinhofer, the powerhouse behind all reporting at LicensingStore.com. She leads our supplemental, Secretary of State, and NMLS reporting division, and she is the go-to resource for companies expanding across multiple states. If there's a reporting rule, deadline, or obscure state requirement, Erica probably knows about it. If you've ever wondered why some states ask for 100 data points or how one missed deadline can block your renewal, then this episode is for you. So let's jump in. Hi, Erica. Welcome back to Approved AF.
Hi, Catalina. How you doing?
I'm good. You are such a fan favorite on the podcast.
Thank you.
So, for those who may have missed your previous episodes, can you just give us a quick introduction into your role at Licensing Store and who you are?
Yeah. So I'm Erica. I am in charge of the reporting department here at Licensing Store. That includes Secretary of State reports as well as NMLS reports. And what we're going to be discussing today is the third facet, the state-specific reports that are also required once you get licensed, just to kind of keep compliant and keep your company rolling.
Yeah, exactly. Today we are diving into something that really has not gotten enough airtime, that supplemental reporting. So again, just kind of diving a little bit deeper into that for listeners who might not be aware of what that means. Can you give us like a quick overview in Supplement's language?
Yeah, absolutely. So as most people know, we do have the mortgage call reports due to the NMLS on a quarterly basis and an annual basis. So a lot of times people are mistaken that those are the only compliance reports that they have to complete. Once they complete them on the national website and submit them to the states, that they're good to go. What a lot of people aren't aware of is that depending on the state licensing agency and the department that your license is actually gone through, some of those departments do require supplemental reports in addition to those mortgage call reports. So these are not in lieu of mortgage call reports. Everybody's still required once you have a license submitted on the NMLS and it's approved and you're rolling, you have those NMLS reports. But only some specific state agencies actually have additional state reports due to them. And then on top of that, it gets a little bit more dicey just because within those states, then it also can break down by license type. So, for example, some are only pertinent to servicers or lenders and not the brokers, whereas others are required for all licensees regardless of the license type. So it's really important to be familiar with not only what state that you're licensed in, but also what agency you're licensed through.
So like you just said, not every state is going to require a supplemental or an additional report here. But for the states that do, what are they kind of looking for?
So what these reports encompass is more data and more loan information than just the mortgage call reports require. What the mortgage call report is essentially just a snapshot of your company's pipeline for the quarter. So what that means is just how many applications came in, how many applicants came in looking for a loan, and then what actually happened to those applications. So it's just going to show totals for each state. With these state supplemental reports, a lot of times they require 2, 3, up to 4 times more information in the mortgage call reports. They want more information regarding the borrowers, such as credit score, gender, things like that they are doing. They're looking for more information on those loans and collecting more data than just the pipeline total numbers.
Okay. And again, biggest difference between an MCR and these state-specific supplemental reports are going to be in the frequency that they're due, or just the actual amount of data that's required?
It's all different. So it's submitted to a different agency. You submit it online. Some of them you submit them via email with just an Excel sheet that you fill out. So that differs as well. It's not just all on the national site. A lot of them are on the individual state sites. For example, California, you have the Department of Real Estate, but then you also have the DFI. So those are two different licensing agencies with two different websites. So those reports are submitted on different websites so that they can go to those specific agencies. So not only is the information different, how you submit it is different, and the frequency is different. So for example, Nevada has a monthly data report that's due. North Carolina has a quarterly report that's due. California has an annual one. South Carolina has an annual one. So it really just depends on the state. Unfortunately, they are just free to choose whatever and whatever they want. So it's important that when you get those emails, because that's really the only way that you'll know about it, is they will send you an email saying, hi, now that you have this license and you are within our conglomerate of licensees, you now are required to submit this by this date in order to be compliant. So it is sometimes kind of last minute that you know about it, but that's why it's really important to stay on top of your emails, as well as making sure that your information both on the NMLS and on all of these state sites are accurate and being tracked.
Excellent. And then what are some examples of states that require the supplemental reporting? I know you mentioned a few of them, California, North Carolina. What types of data, say, are the bigger reports going to be asking for, and how much time does that usually take?
So the most data intensive reports that are required are the Carolinas. As I mentioned, North Carolina is a quarterly report. That report is due the same time as the mortgage call report. So it does kind of make things easier in that sense, in that they have the same due dates. You know, if you know you have to do one, you also have to do the other. However, that requires almost 90 data points, whereas the MCR, if you're just brokering, you only need about 8 data points, such as like the purpose of the loan amount, the lien position, things like that. North Carolina goes all the way down to the DTI, their LTV, they want their FICO score, they want all of that borrower information, as well as a lot of important milestone dates. So disbursement dates, the LE sign dates, things like that are usually tracked within the LOS. But those dates are going to be really important for that report, because if you don't have them tracked within the system, you do have to go back and track them down. North Carolina is kind of hard because you have to upload it into their system, and their system does a data validation, going through and making sure, if this loan is marked as closed, then do we have all of the required data points for that? If this loan is withdrawn, do we have all the required data points for that? So it does kind of take some time to upload, go make sure that you have all that information, but it won't let you submit without that information. South Carolina is the same way. They also have almost 100 data points that's required. However, like I said, this one is an annual. So you are required to keep track of that information from the beginning of the year to the end of the year, and then have it all compiled and ready to go by the following March. So those two are really the most data heavy ones that are looking for applicant information. If we get more into the nitty gritty, there's, for example, Arizona doesn't have a supplemental report required unless you have the escrow agent license. So that license, if you do have that, there's a specific report that they want to see for all of your escrow agent activities. There's also one due to West Virginia, and that one is really just more of a financial report looking at your tangible assets and if you stayed above the required net income line, things like that. So what these reports are doing is what these reports are looking for is the information that the states want to keep track of that the mortgage call report doesn't already track.
So the reports can vary based off of your loan volume, your loan activity, or just business details in general. And so keeping your data clean and neat from the beginning, I know we've said it before on other episodes, but like it is imperative. But what happens if a company misses a deadline or incorrectly files these reports due to having, not the right information for their email address, not paying attention to their emails, or their LOS system was just not set up to be compliant and keep that information clean.
Yeah. I will start by saying a lot of these LOSs are expanding to include these state reports. North Carolina just got released for both LendingPad and Arrive just this year. So that's really helpful. I also recommend just keeping in contact with your support person for your LOS so that you can make sure that you're utilizing these features to their fullest potential. There are times that you aren't using that one field on the loan application because you think it's redundant, but that one specific report pulls that one field only. So it's things like that that you want to get familiar with in your LOS so that it also works for you, but it's only as accurate as the information within it. So that's the most important part, like you said, is making sure the information is accurate and making sure you're utilizing your LOS to its fullest potential. Now, a lot of times people do ask, I missed this report. It's past due. I have a deficiency on or a license item on the NMLS. My answer to your question is, again, it varies. So California, for example, has a hefty fine and late fee for not submitting on time. That state actually, if you are licensed through the DFPI and you have that California financing law license, you don't submit the annual report by March 15th every year, that report acquires a late fee of $100 per day that it is late, including weekends, not just business days. So that is $100 per day, and it keeps going up to $25,000. Once it goes up to that $25,000, then they threaten to revoke your license, and they start, that process. And if you still don't submit, they will revoke your license. So anytime along that route, you should be given a call or receive an email from the DFPI, but the DFPI does require that you have a separate company email address strictly for the DFPI. So a lot of people forget about that email address and then they miss all of these emails. So again, it's just really important to keep track and making sure that if you do have to create that separate email account, just have it funneled into your primary email account. It'll auto forward to you. And then that way you won't miss anything. That's a nice way to just make sure that, not all of us check all 4 of our email accounts. If you have them all forwarded into one, it's easier. Other states like North Carolina, they will just issue a license item on the NMLS for the North Carolina quarterly loan log and just tell you, hi, we're missing the information for North Carolina. Please have it submitted by this deadline. If you do not have it submitted by the deadline, they too will start the process of license revocation. Or if it's close enough to the end of the year, such as now, we are currently in October. So if we don't have the third quarter North Carolina loan log submitted by the 15th of November, then your licenses are at risk of not getting renewed. So if that license item is still sitting there, you will not be able to renew your North Carolina license, same with South Carolina, until you submit that report. So that's why it's really important not only to keep up and make sure that these reports are being submitted on time, but especially come time for renewal and at the end of the year when you're trying to get your CEs done and make sure all of your licenses are renewed and good to go by the deadlines. You don't also want to be going back and trying to figure out all of this information for all of these reports that you missed.
Absolutely. You also don't want to be hunting down the logins for these random email addresses that were set up. So the state isn't going to care that, somebody in your company created that account and is no longer with the company and you have no idea what the logins are. They sent their information to that email address and they're expecting you as the business owner to stay on top of it.
Yes.
So get in front of it before it's too late. But what I keep hearing you say is it depends, right? Things are completely variable depending on the state or the license type or, a variety of other factors. So for a growing company that is excited and licensed now in multiple states, how can they realistically stay on top of all of these additional supplemental reports without losing track of them?
Well, first and foremost, you can have us at LicensingStore help you out. We will help you go through all of your states and let you know these are the requirements and compliance items for this state. If there are any examinations or anything like that that pop up, we can help you get those reports amended to match the current information and things like that. So we are here to help with that. But unfortunately, outside of using a third party for assistance and just getting a long list of all of the different reports required for each different license out there, the only way to know if you are required to submit a report for a new license is if that licensing agency reaches out to you. So, for example, if you just recently got a license in South Carolina, you should get a message from the Consumer Finance Division that will reach out to you and let you know, welcome to the state, first of all. Thank you for participating and doing business with us. But here are the new requirements for you. And then also, as these reports and things come due, they send multiple reminders, just like we do. They send you a reminder at the completion of the year saying, hi, now that the year's over, this is all due. However, most states send those, so those do get an influx right at the beginning of the year of all of the requirements for the end of the year. So they do send follow-ups and let you know, leading up to the due date, this is still due, this is still due, this is still due. These states don't want you to fall out of compliance. They want you to keep doing business in their state. So it is not their goal to trick you into not completing your compliance items, but they will only be sending so many reminders. They are going to assume that you are an adult that runs a business. So you do have to check your emails and check your phone lines and things like that, because some states only email, some states only call. So realistically, it's just important to stay on top of your lines of communication, because that's the only way that states are going to let you know.
Absolutely. For companies that you have worked with, without revealing anybody's names or sensitive information, what are some of the most common mistakes that you see them make around supplemental reporting?
I think the biggest mistake that especially people in this industry make is assuming that it's easier to beg for forgiveness. And it never is. These states, again, they're not trying to trick you. They want you to do business in their state and get them revenue as well. But at the same time, like I said, they're not going to baby you. So if you, like you had mentioned earlier, if we have seen multiple companies change ownership over the years. And so the original owner is the one that made the original login credentials. And now 3 years later, the current owner doesn't know them. And we can't get in and we can't get the reports filed. So, oh, sorry, we're working on it. Or, oh, sorry, here's my excuse. These states won't give you an extension. They won't give you any sort of a second deadline. There are no I'm so sorry. They'll give you a refund, whatever it may be. The late fees are there for a reason, because they're trying to give you a chance to make things right past the deadline. And what if we do get to the point of revocation, that is the end of the line. That is not the time to start begging for forgiveness. That is the time to start getting your ducks in a row and prepare to maybe have to reapply for that license, if the state agency even allows you to. Because when it gets to that point, they kind of see you as somebody who is not responsible enough to conduct business, or, not ready enough, or they don't have enough liquid assets or things like that. So the main takeaway is, don't wait until the last minute. These states don't really care about all of your excuses, and they definitely aren't going to listen to them.
Do you think that these errors happen more because of just misunderstandings, or owners are assuming that their NMLS reports or their NMLS renewals just automatically blanket and cover everything?
Yeah, I think it's more of the latter. A lot of people see the word report and they think that it's just one catch-all report, and that's just not the case. I think a lot of times too, when we get these email reminders come through, it's kind of like the email reminders that we get for doctor's appointments, like, yeah, I know that's coming up, I'll deal with it. I'll cross that bridge when we get there, kind of situation. And then the time passes and they forgot to cross the bridge. So even right now in mortgage call report season and things like that, right now in end of October, we're about to hit November. We are in prime renewal time, but we are also 2 weeks out from the mortgage call report deadline. So again, a lot of people are focusing on renewals. They're getting their CEs done. They're going and taking their classes, doing all of that stuff, and then not even thinking about the reporting and stuff that's still due on top of it. So I know, like I said, we all get bogged down with emails. We all get overwhelmed. Utilize your calendar. Make sure that you set calendar reminders, and then make sure that you're utilizing your LOS accurately and appropriately so that when these things do come due, you can just easily export the pipeline, send it off, and then it's just a one and done situation. When you get that reminder email, you can submit it and then you move on. So that's why it's really important just to make sure that your data is accurate, on time, good to go.
We've helped hundreds of companies with their reporting and supplemental reports on top of that. What is one example of a company that thought they were doing well, but then they realized that they missed reporting requirements? And how did you assist in helping them recover?
Yeah, so we did actually have a current client originally come to us with their California CFL license, the California Financing Law license, was pending revocation due to not filing the CFL annual report, which does come with that hefty fine. We were facing, I believe, like a 10-day deadline. And unfortunately, the information wasn't able to be exported easily. So we did indeed miss that deadline just because we needed that in the loan information and financial information from the client. We did end up having to work with the DFPI to reverse that revocation. We did get it. We were able to get the license reinstated. However, there was a big fine associated with that as well. So again, don't wait until the last minute. But we were able to get that late report filed. We asked the DFPI to reopen the annual report online because they actually do have the capacity to open and close the report. So if you don't submit it on time, they just close it off and you're not even able to after a certain point. So luckily we do have that relationship with the individual state department to be able to kind of say, hey, this individual, was not aware of, this requirement, because these requirements are on top of, the Secretary of State renewals, the mortgage call reports, the financial tax board and things like that, all of your tax filings. So there are a lot of requirements for just one state or just one agency. It does get daunting, but again, not always are these agencies going to listen to your excuses. This was really just one instance where we were able to pay our way back into a reinstatement and making sure with, a promise that this will not happen again. We're on top of the new annual report already, things like that. But when you do get that one chance, they really do, you do kind of have, a yellow star on your account as, we're going to double check them. If they do fall below, the net income line or the net worth requirements or things like that, they are going to keep a closer eye on you. So it's best just to stay in good standing with each of the different divisions.
Okay, so we have NMLS reports, and that's going to consist of your annual financial condition report and your MCRs. Am I missing anything there? Then you're going to have state reports, and that would include your Secretary of State report and then these supplemental reports.
Correct.
And then on top of that, you could also be looking at tax-related state filing reports.
Yes. For the tax reports, I think it's best typically to just have a CPA that you have and trust kind of in your pocketbook, in the back of your pants, just to make sure that you are, within these tax codes for each state. Each state is different. Again, they vary. So it's really important to make sure that you are working with somebody that is knowledgeable about that, because taxes and that kind of line is definitely something that you don't want to get in bad standing with, because then the state has the opportunity to straight up tell you that you cannot perform business in their state at all. So we just want to make sure that we are taking care of those tax reports. Again, get a CPA that knows what they're talking about, which with each of the states, they'll be able to provide you with all of that information that you need.
So LicensingStore does not assist with tax-related reports at this time, but with the supplemental reports, the Secretary of State reports, and the NMLS reports, you and your team can assist with helping companies navigate those.
Correct. Yes, we assist with the NMLS reports, the state supplemental reports to the differing licensing agencies, as well as the Secretary of State reports. If you have any issues getting reinstated on the Secretary of State level, or you need help, getting an annual report filed, we can definitely assist. Again, like you mentioned, the only thing that we aren't able to assist with right now is those tax reports. We aren't CPAs, which is why we advise you to find a good CPA and go have them help you with each of the state requirements.
And then for companies that are just not ready to invest their or outsource their reporting to a third party like us, what is the best system or calendar method that you've seen for tracking these deadlines?
It really depends on the individual and the person. I have found with myself, we use Microsoft Outlook, and so I like calendar reminders. We heavily use our calendar for, meeting invites and things like that. So it's easier for me to use the Outlook or the Teams calendars. If a lot of our clients tend to be boots on the ground on their phone a lot more. So if it makes more sense, you can use the to-do list function on your phone. You can use the calendar function on your phone to set reminders. I use reminders on my phone, even just to remind myself when to give my dog's flea medicine. So if you set those reminders to, just like you do in life, set them for your business as well. I'm sure that you set reminders to tackle a client again or, circle back with somebody. So it also doesn't hurt to set reminders for compliance things just to make sure that you're also staying in business.
How early can somebody file a report ahead of time, ahead of the deadline?
The reports are typically able to be submitted the day after the reporting period has closed. So, for example, if it is an annual report that covers from January 1st to December 31st, typically that report opens on January 1st of the following year to submit. So again, if you have all of that information already accurate and you've updated everything along the way, you can just export it and submit it then. Otherwise, there are some other states, New Jersey, for example, they could take kind of a while to get you, the actual report. That one is a paper report. So, those ones, they do take a little bit to release them. Again, just stay on top of your emails. But again, the ones that you're able to submit online, most of them, if not all of them, are able to be submitted the day after the reporting period has closed, just like the mortgage call reports.
And how can brokers or compliance teams within a company create a workflow that prevents reports from slipping through the cracks?
I think it's important to break things down by state and then within that list all of the requirements. I am a big fan of a good old Excel list. So if you just start with, these are the few states that we're licensed in, these are the reports that we're aware of, on the Secretary of State level. Now start doing some research on the tax level. Now start doing some research, is there a mortgage specific report that's required and things like that. So it's really just important to compile all of that information, especially as you start adding on more states and adding on more responsibilities and things like that. You still want to make sure that you are keeping a list of all of the due dates and all of the requirements for each one.
And how does LicensingStore, with the offering of their monthly licensing management program specifically, help clients stay ahead of reporting deadlines without the stress?
So we do send email reminders once the reporting period is up. So as a report starts coming due, I personally send email reminders to everybody in our program with that state license, letting them know this is the report that's coming due. This is the information that I need. And then this is the information that I need it by in order to complete the report on time. That allows the clients to start gathering information if it's not already together. They typically have about 2 to 4 weeks to get things together and get the information over to me. And that usually just provides me enough time before the actual report due date to go through the information, figure out if I have any questions to ask, if we're missing anything, any missing FICO scores, any missing disbursement dates, anything like that. So it's really just important to, again, stay on top of communication lines because that's also how we communicate with our clients, our monthly clients, and get the information from them.
So for a client or a future client who might be listening, who's thinking, Ooh, I think I missed something. What would you suggest be their next best step?
I think the best step is to give our team a call and we will give you a once over on the NMLS. We can kind of assess what requirements have been missed, what ones are coming up, and which ones we can assist with.
And where can listeners connect with you in order to learn more about Licensing Store or get clarity on their reporting requirements?
You can always give me a call. I'm usually available over here in the reporting department, so feel free to give me a call with any questions at 248-663-3094. You can also email me at erica@licensingstore.com. It's ERIKA. You can also find me on LinkedIn if you have any questions out there as well.
Awesome. Thank you so much, Erica. Really appreciate your time. Thank you for joining us on this deep dive into supplemental reporting. If this episode helped bring clarity or saved you some future compliance headaches, share it with someone who needs it. Don't forget to like, subscribe, and follow us for more compliance, licensing, and behind the scenes industry insights. And follow along on Instagram at ApprovedAF_licensing. Stay licensed, stay compliant, and stay approved AF.